He invested $3,000 in ULTY, YieldMax ETF, his 2-month dividend income, and ULTY review. Hey everyone, and welcome back to the channel. Today, we're unboxing something truly fascinating in the world of high-yield dividends and income investing, the ULTY ETF. I am sharing with you a video from a colleague of mine, who has dived into ETF investing and will be sharing his results. These are his words. If you're looking to generate consistent cash flow from your portfolio, then you've likely heard of this powerhouse from YieldMax. But what's it really like to invest in? Well, for the past 2 months, I've put my own money on the line, about $3,000 to be exact. And today, I'm pulling back the curtain on my personal experience. We're going to talk about why I jumped into ULTY, how it's been performing so far, and whether I'm planning to stack even more shares in my portfolio. This isn't just a dry explanation. It's a deep dive into the real-world performance of a weekly dividend ETF that's been making waves. Part 1. What in the world is ULTY? And why it's not your grandma's dividend stock. So, what exactly is ULTY? Think of it as YieldMax's Ultra Option Strategy Income ETF. But don't let the fancy name scare you off. In simple terms, it's an actively managed ETF that aims to churn out weekly income by using a clever strategy. Covered calls on a basket of exciting US-listed stocks. Now, here's where ULTY gets interesting. Unlike some other options-based ETFs that might just deal with synthetic positions, ULTY actually holds the underlying shares of companies like Robinhood, Upstart, Tesla, Reddit, and Palantir. These aren't your sleepy blue-chip stocks. They're often companies with a bit of a wild side, offering the kind of stock market volatility that option strategies thrive on. What's truly unique is that ULTY isn't tied down by a rigid rulebook. It's like a seasoned chess player, always adapting its strategy. This means they can sell those premium-rich covered calls when the timing is just right. And here's the kicker. They also buy protective puts. Think of protective puts as an insurance policy. Remember when a certain meme stock tanked? ULTY held it, but thanks to those puts, the ETF itself didn't crash and burn. That's a testament to their proactive risk management. This ETF is a living, breathing portfolio, constantly adjusting its 20 to 30 holdings. It's been remarkably stable in its price point, all while delivering a juicy weekly dividend yield of around 8 to 10 cents per share, consistently since March 2025. That's like getting a small paycheck every single week. For those focusing on passive income streams, this is a huge draw. Part 2. My ULTY Journey, from $0 to $3,000 and beyond. Let's talk about my personal journey with ULTY. Right now, I own about 500 shares, with a cost average of around $6.12 per share, bringing my total market value to roughly $3,150. You might be wondering about dividend reinvestment. For ULTY, I've actually got it turned off. Why? Because I'm manually taking those dividend payments and strategically dripping them back into ULTY, or even into other income-generating assets that catch my eye. The ultimate goal here, as the name implies, is to generate that delicious cash flow, whether it's for reinvestment or just for some extra spending money. When I first jumped in, the annualized yield was absolutely incredible, north of 70%. And guess what? It still is. That massive annualized dividend yield, distributed every single week, is a major magnet for this ETF. Most other YieldMax ETFs pay out monthly, so ULTY's weekly payouts are a game changer for those who appreciate frequent cash flow management. I also really admire ULTY's strategy adjustments to keep its net asset value, NAV, stable. It's like watching a tightrope walker perfectly balance themselves. Every time it pays out a dividend, it recovers almost instantly the following week. This reliability and consistency, coupled with those sky-high dividend yields, have been incredibly reassuring. Part 3. The power of diversification. Why ULTY stands out. One of the big reasons I gravitated towards ULTY is the power of diversification it offers compared to single-stock ETFs. With ULTY, you're not putting all your eggs in one basket. Instead of the singular stock market risk you'd face with, say, a TSLY, which is solely focused on Tesla, ULTY spreads that risk across 20 to 30 different underlying securities. If one stock dips, it's not going to sink your entire investment. It's a beautiful way to mitigate portfolio risk while still chasing those impressive dividend returns. My 500 shares of ULTY currently represent about 5% of my overall portfolio. Now, I know some folks out there are going all in, even taking out loans to invest heavily in ULTY. While the potential for high returns is certainly alluring, remember the golden rule of investing. Don't put all your eggs in one basket, especially with newer, options-based income products. These are exciting, but they do come with their own set of considerations. And speaking of strategy, I've even been dabbling in selling cash-secured puts to potentially acquire more ULTY shares at a lower cost basis. It's like setting a trap to buy something you want at a discount. For example, I have a $6 cash-secured put for July 18th, and some at the $7 strike for August 15th. I've collected some nice premium income from these, and I'd love to get assigned those shares if the price drops. It's all part of the game to lower that average cost and boost my dividend income stream. Part 4. The sweet taste of ULTY dividends, a snowball effect. Now, for the part we've all been waiting for, the dividends. The juicy, consistent weekly dividend payments from ULTY have been a joy to watch. Since May 30th, I've been receiving these little gifts in my account. It started small, around $28 for the first week, then $28 again, then $33, $35, $46, and this upcoming Monday, it's projected to be $47. You can really see the compounding effect at play here, even with dividend reinvestment turned off. I'm slowly but surely adding more shares, not necessarily by reinvesting all the dividends back into ULTY, but by strategically allocating new capital. If I were reinvesting every single dividend, my payments would be even higher right now. When you add up all those payments over just under 2 months, we're looking at just over $200 in pure dividend income. And that's not even counting the capital appreciation. My ULTY shares are also up about $87 in value. So, in total, we're talking about a $300 return in less than 2 months. That's roughly a 10% return. Absolutely incredible for such a short time frame. While I'm not overly concerned about the share price soaring, I do love seeing its stability. ULTY has truly transformed. It was once notorious for its volatility, but thanks to its strategic shifts, it's become one of the most reliable income ETFs on the market. They've moved beyond just synthetic covered calls, now holding those underlying shares, actively selling calls when the time is right, and crucially, buying those protective puts as insurance against big drops. This robust investment strategy has completely changed its risk profile. Part 5. Looking ahead. My ULTY game plan. For the past few months, I've been genuinely impressed with ULTY's risk-adjusted returns and its incredible yield. That 70% plus annualized yield and the frequent weekly payouts fit perfectly with my strategy of generating consistent cash flow. I use these dividends every single week to either buy more ULTY or to add to other positions like MSDY, or even more stable income-focused ETFs, such as SBY and QQQI. Now, don't get me wrong. While ULTY is a fantastic tool, it's also a high-risk, options-based ETF. It's not necessarily a core portfolio holding for everyone. If market volatility dries up, or if the underlying stocks make sudden, sharp moves, those distributions could take a hit. So, it's crucial to keep a close eye on factors like option premiums, implied volatility, and NAV trends. And remember, it's an actively managed ETF, so the fund manager's decisions are key. But so far, they've shown they're learning and adapting, which is a great sign. So, what's my next move with ULTY? For now, I'm simply holding my current shares. But my plan, as I mentioned with the cash-secured puts, is to strategically add more shares and eventually reach a 1,000 share threshold. From there, we'll see. Depending on market conditions, I might even scale up further. I'm also pairing ULTY with broader ETFs to help balance out the risk. In fact, I've got an upcoming video that will reveal the 2 best ETFs to pair with ULTY for a truly balanced and conservative growth and income portfolio. You won't want to miss that one, so make sure you're subscribed and hit that notification bell. ULTY has pretty much delivered on its promise. High yield with some manageable volatility. For income-focused investors who understand the inherent risks, it's a truly fascinating tool that can accelerate your portfolio's growth and provide a powerful stream of income. What are your thoughts on ULTY? Are you invested, or are you considering it? Let me know in the comments below. And if you found this video helpful, smash that like button and subscribe for more dividend investing insights. Until next time, happy investing.